I mean, this is serious. We've never seen this sort of credit contraction without it being corrected by the central bank, if you like, taking the running and providing the extra credit. So, the Americas really, I mean, when it comes to government spending, what it means is that, the sort of any estimates of tax revenue are way too high. Any estimates of welfare costs are way too low. So that's going to open the gap well above the 1 trillion net of expense in the last fiscal year. And I think we're easily looking at something which could, with the interest bill, look at about, over $3 trillion, $3.5 trillion. And they can't get off it. They really can't get off it. And now, of course, they've got the war in Afghanistan, and they've got a new trouble in the Middle East. You can't fight two wars. They can't even fight one war. They can't even finance one war, let alone two. So, I mean, whether it's Japan goes first or the dollar goes first, well, I mean, we will see, but I would suggest that King Dollar is actually the thing that really matters. And I think that this winter we will see energy prices continuing to rise. You get a seasonal rise in food prices. And I suspect that the current dip in interest rates and all the propaganda about how interest rates are now topped and we can now look towards lower interest rates. That's propaganda by governments, scared out of its wits about what's going on. It sees that the threat to the whole economy is this level of interest rates. So they're trying to back off it. They're trying to persuade us that the problem has gone away. It has not gone away. It's going to come and bite us very, very hard. And we will know that in the not too distant future. I mean, so I think that, the dollar is the real problem. And another aspect of this is that with the way in which the 10-year US Treasury yield has risen, this has not yet been reflected in a fall in the valuation for the equity markets. I reckon that the S&P 500 is so overvalued that in order to correct itself for the current level of yields in the US Treasury market, it should fall to under 1,000. Now that's a real bear market. So you can see that a further rise in interest rates, which is almost certain given the energy price situation which is evolving, plus the fact that banks are no longer expanding credit, but if anything are trying to contract credit, which drives up the cost of credit to a borrower. This, to my mind, is likely to destabilize the whole of the fiat currency system, which is based on the dollar. And it will start with the dollar and go elsewhere. If it happens with Japan, I don't think that will destabilize the whole situation. But my goodness, it will certainly get us very scared. I was actually looking at this for an article which will be released on Thursday for Gold Money. And, the dollar since 1971 has actually lost almost 99%, it's 98.2% of its value. In terms of if you like, in terms of real money, what legally is money and what historically has been money. And of course, you tell this to people. They know that we've had inflation and all the rest of it, and we know that the central banks have a target of 2% inflation, which basically means that the purchasing power of the dollar over time declines. Well, but nearly 99%. I mean, you must be joking. They don't actually realize what's been happening. So, I mean, that's, the way to look at this is not in the sense that there are so many dollars outstanding and there's only so much gold, let us say, in the central bank's reserves. Therefore, divide the number of dollars by the reserves in the central bank and you get a figure which should cover it. No, that's not the way to look at it at all. The relationship is this objective-subjective relationship between gold and a fiat currency. As to how long the current situation can continue, we see the debt trap. That's one issue. We see the central banks deeply in negative equity, which is something that can be fixed, with the exception of the ECB. That's going to have a real trouble. So that's another issue. You've got commercial banks trying to reduce their exposure to the economy, and things like commercial real estate and all the rest of it, and which could bankrupt this bank, that bank, whatever. That's another problem. You've got as energy prices are forced to rise by those nasty Russians and nasty Saudis and nasty Iranians, who may indeed close off the Straits of Hormuz, and close off the Red Sea if things cut up rough. But even without that, you're going to see, price inflation, headline CPI inflation rise. They'll try and fiddle the way out of it. They always do, but it'll still rise. And so interest rates will continue to rise at the central bank level. You just made the point about contracting bank credit. The shortage of credit means that the cost of credit will tend to rise. So that's basically taking out the whole of the private equity industry, which, we've got a very good example of that. Thames Water, which is, I think, our largest water utility in terms of households being served, is pretty much bankrupt. It's been thrown a lifeline. But the reason for that is that, good old utility business, which is nice and stable and all the rest of it, to which we add that the regulator works out all the numbers and says, this is the profit you can have. So they're guaranteed a profit. It's quite simple. So what happened was that when interest rates were close to zero, private equity goes in, buys it, cost of funding, square root of sweet nothing. Now interest rates are rising. Whoops, we got a problem. Even they're going bust. Simple businesses which have been overloaded with debt due to what's been happening over the last 10 years, 15 years, they're going bust. That's another one. What does government do? Government basically bails it all out. So that's a problem. And that's before we talk about the loss of influence that the dollar, the king dollar, has over the rest of the world, which is gradually being eroded by the mistakes that the American administration are making in their foreign policy. Trying to stop Russia, contain Russia, conquer Russia. Whatever the objective is immaterial, but the Ukraine is a disaster. I hear that there's a group of 50 countries which are supporting Ukraine, and a committee of these countries are now talking to Zelensky with a view to seeing to what extent a compromise with the Russians can be found, which will involve ceding territory to the Russians. Do you think that Putin's going to sit there and say, oh, yeah, we can agree? No, what he'll do, because his objective is completely different, and that is to just get the Americans out of Europe, get the Europeans on his side, which basically means chucking the Americans out and us if we continue to behave as we do, like the Russians' pet poodle, not the Russians, sorry, the America's pet poodle. So you can see that that what's going to happen. I think that America will just walk away from it, just as they did in Afghanistan. That's 2 walkaways in President Biden's first term. That's going to happen.
Yeah.
And the reason it's going to happen is because they've run out of ammunition. They've now got to concentrate all their efforts on the Israeli-Hamas situation. They can't fight 2 wars. They can't even fight 1 war. So you can see that the loss of face as they walk away from the Ukraine will only be offset by the fact that their priorities have changed for very obvious and sensible strategic reasons. We need to protect Israel from Hamas, Hezbollah, whatever, which if they get involved, I mean, God save us is all I can say.
Yeah.
So you can see all these factors are all coming together. And there are also hidden factors. You've got the whole of the derivatives thing, which is a huge, great credit overhang over the whole banking system. Of that, if you look at the foreign exchange exposure in the form of exposure in non-American banks, in other words, outside the US credit system, then according to the Bank of International Settlements, we're looking at a further $90 trillion. That is the extent of the euro-dollar market, if you like. And there's another 10 trillion of bonds, euro-dollar bonds. I mean, we think that the euro-dollar bond market is the extent of it. No, it's not. The credit market is 9 times bigger. So all these factors, it's like sort of Hitchcock's The Birds. They're all gathering on top of the roof of the house of these people trapped in it. And we know what's going to happen. You don't go outside because you'll get pecked to death.
Yeah.
That's roughly where we are. How long it'll take, only time will tell. But you can see the whole thing gathering. And I think the other question, which we don't know the answer to, is we don't know when it'll start, but we also don't know how long it'll take. It could happen very, very quickly, because the point about this objective-subjective relationship, when people realize that actually it's not the dollar which is the objective in terms of pricing everything, it's subjective itself. When people realize that, then I think the dollar is toast, and the whole of the fiat currency system on top of it. And going back to the point that you were asking about earlier, Daryl, this is why the Singaporeans, Chinese, and the Russians have been accumulating gold like Billio.
Yeah. Mm-hmm. Yeah.
Because they know it's real money.